Hi, welcome to episode 6 of this series of lives that will happen every Friday at 2 p.m. In these lives, I talk about strategies to help real estate investors. My name is Adam Levine. I'm a private lender, been private lending for over a decade. We deal with different buckets of capital, institutional, private, and we are here to talk about a subject that is something that investors they balk about, right? Because no one wants to pay extra fees. But then again, lenders need to they need to keep the lights on, right? And they have expenses, and also there's also a lot of fees to the lender, meaning that, for example, a wire fee, right? A lender wants to wire money. Well, that serves as a pass-through expense to the borrower. So remember, lenders don't pay anything. Everything's a pass-through. Doesn't matter if it's a hard money loan, maybe a private lender, you could get away with um, not passing through the fees, um, but institutional capital, yes. And generally, if you are a private lender, keep that in mind. Everything is a pass through to the borrower. Wire fee could be FedEx, they get the shipping label, CoreLogic fee. So now let's talk about this, right? So different types of fees to look out for. An application fee, right? We don't charge application fees, but there's lenders that do, right? Can you get that removed? Probably. I think you can. There's always negotiation with lenders, but these are things to look out for. An application fee, we don't charge it. There's some lenders that do. There's some lenders out there that charge for a proof of funds. I couldn't believe it. Our proof of funds is automated. It is so robust. Like, all you gotta do is you go to our website, right here. Let me show you real quick exactly how to get a proof of funds from us. We don't charge for it. It's completely free. But I want to show you something. Now, let me show you this real quick. Give me 1 second. Right here. You go here. See this? Click here. Request proof of funds. Fill in this information, really short, comes to you in less than a minute. This is free. We do not charge for that, right? So you may have a loan origination fee. So lenders could finagle numbers. Generally, lenders make their money on points. Um, they make their, like, let's say it's a fix and flip loan or a 12-month loan or a bridge loan, whatever you want to call it. A lender, they make money on points, and then there's usually a yield spread. So a lender may have a par rate. For example, if I'm going to close a loan, a 12-month loan, my buy rate from an institutional loan buyer may be at, let's say, 10%. And if I originate at 11%, I get to keep that delta. So that's called a yield spread premium, right? That the lender gets, which is that 100 basis points. What I say, 10%, and 100 basis points difference on the interest rate. And um, so loan origination fees are, there are ways to finagle that. Generally, for a 12-month loan, there is an origination fee. We start at for a standard loan at 0.75. Origination fee. Most lenders maybe start at 2%, maybe 1.5, maybe 1.75. I remember when I started out over a decade ago, this is when there wasn't any institutional capital in the market. This is when there was just, and like maybe a doctor or lawyer, they pull their resources together and they'll lend money at 14% and 4 points at a low LTV at 65%. You didn't have this 90, 100 type of underwriting. But there was no secondary market. So thank you to the secondary market. Institutional capital it basically helped compress rates, bringing rates down, offering better economics to borrowers. Also helps lenders have liquidity so they can recycle. That's a whole other discussion, right? So low origination fee. Um, so I would say fixed flip loans there are some lenders that offer 0 points. But keep in mind, they may make it up on other fees. You have to look out for other fees. They make it up, and they're probably going to charge a higher interest rate to make up the difference because they want to make that yield spread. But look out, no origination fee, but you're going to find other fees. But keep in mind, the lender should make some money. You can't let lender's not going to work for free. They have payroll, they have staff. It's not all profit to them, so they got to make some money on the loan, right? Um, a mortgage broker fee. The mortgage broker fee is so that's basically, for example, a broker comes to us, maybe we charge maybe 1 point, maybe 0.75, whatever, right? And then maybe no points. And then the broker will add their fees on top. So the broker's not going to work for free either. They're going to shop and try to get you the best terms with the best lender, and they have a service that they're providing, right? They're going to help you obtain the best financing. They should be offering some value because I have clients of ours, they don't mind paying more money. They tell me, even though we're cheap, they don't actually, we give them 100% financing, so they know it's more expensive. But yeah, so box loan is cheaper, institutional. If it's a loan with 100% financing, it's more expensive. However, our client does not mind paying more because he likes our service. So going back to a broker, if you have a good broker or a good lender, sometimes you pay for what you get, right? So if you want the cheapest, you're going to get probably a lousy service. Maybe you pay, but also keep in mind that let's say market right now is 2 points. Let's say for a 12-month loan, fix and flip, maybe for DSCR, brokers out there, if you're adding on 2-3 points on top of that, you're out of market. You're gonna lose business. Keep in mind, just you got to be cognizant of the fees you're charging. And because there's a lot of lenders out there that are competing for the same business, and they're gonna undercut you. So I always talk to brokers. I like to take it slow with them when they come to us and try to advise them on a way that they're gonna get the best economics for their borrower. Also, we leave a good economics for them so they could put their field out, but also we don't want them to be too aggressive where they're going to lose business. It happened in the past. I had people throw on 3-4 points. I'm like, whoa, what are you doing? You're going to kill the deal. And then the funny thing is, I have a friend that's another lender, and they tell me, yeah, we know that broker, and they do the same thing, and they're just throwing and actually that borrower that came to you from that broker that threw 2, 3, or 3, 4 points actually end up going to another broker and they close with us. So underwriting fee, that's pretty standard. I would say underwriting fee is pretty standard. Um, we generally we generally charge a processing and underwriting fee a lot, but or like we always finagle numbers on our end. We may reduce points, but then we'll make it up here because we need to make a minimum earn. Like every lender probably has a minimum that they need to make to keep the lights on, to be able to pay their staff. So some lenders may have an underwriting fee and a processing fee. Um, I've I've heard some lenders charging $3,500 or like $1,000, maybe 1,500 bucks for underwriting processing fee. Keep in mind, lenders can finagle things because, um, we on our end, we may say, hey, we'll charge you less points, but we want to make a certain dollar amount, but we'll make it up in the fee on there. And the fee is not like it's not a slap in the face. It's reasonable where you're still gonna have better economics or a cheaper, or let's call it a cheaper loan going with us than someone else. But keep in mind that another A fee is something that lenders charge, and you know what? It may be well warranted that they do charge that because you know what? You're getting excellent service, and they're giving you really good economics, meaning really high leverage, really good rates. Maybe they didn't charge you a lot in the points. Um, we have a processing fee, pretty standard. I just touched on that before. Processing fee. Um, Same thing. That pays the processors generally. Underwriting pays the underwriters. Processing pays the processors. That's how they make their money, right? Is these fees. Give me a second. Let me get my tea. A doc prep fee. So a document prep fee or a legal fee. So let me step back. All right. Lenders have their fees, right? Lenders have their fees. They may have an application fee. They have a loan origination fee. Maybe you have a mortgage broker. That's a third party fee, not the lender fee. So lenders have a mortgage, they may have an application fee, origination fee, underwriting fee, processing fee. Those are their fees, right? Everything else is third party, meaning that's another counterparty. For example, doc prep fee or legal fee, right? Attorneys draw up loan docs. So what happens in this industry is that a lender will either draw up docs themselves, but maybe but most lenders will, a lot of lenders will have attorneys draw up the documents, and the attorney may charge $2,000, maybe 2,500. We get our attorney does it for $1,000 or 995, but that's been negotiated, right? But we have some attorneys that they charge more. It really depends upon like where we are, what market, but going back, that's a pass-through expense to the borrower, the legal fee. Again, lenders never pay fees. They pass it along to the borrower. That's non-negotiable. You can't negotiate a legal fee. Like I said, maybe you can negotiate origination fee, mortgage broker fee, underwriting, maybe underwriting processing fee. Um, Now, another pass-through fee is a courier fee, right? That's for transporting documents. That's a pass-through. An administrative fee, that's a lender fee. But that may be another fee. It may be a duplicate from another service. But that's usually generally small. You maybe can negotiate that. Um, some lenders, let me go back. A notary fee. There's a notary fee that may have to be paid. I just looked this up just now because I'm trying to find out what other fees. An email fee. I don't know if anybody's charging email fees to send documents, but maybe attorneys will do that. Maybe an attorney thing because they'll charge you for everything. Um, Wire transfer fee. You want to move money to a different bank or to the same bank. That's a pass through to the borrower. That is or credit. Oh yeah, credit reports. That's a pass through. It's not free to run credit in background. So that's a pass through. Appraisals, right? Appraisals are third party fees. Um, there's I would say appraisals range from $750 or less. Depends upon if you're going through an appraisal management company or whatnot. I don't want to get into uh the whole discussion of what appraisal management company is and or go direct to the appraisal. But what I want to say is that is a third party fee. The borrower pays that. Rate locks. Okay, so a rate lock, the borrower has to pay that, but keep in mind that's not free for the lender. The lender has to place a hedge. Basically, it costs them money, and that's a pass through to the borrower. The borrower pays that. Lenders never pay fees. This is something I heard that lenders do, and I was kind of surprised that they get away with it. A draw setup fee. So I heard some lenders out there. Let's say a renovation budget is over $100,000. They'll sneak in a draw setup fee for 1 point. Now, a borrower may balk at an origination fee, but they may not balk at this draw setup fee because they're just like, oh, my points, I'm not paying a lot in points. And they're not paying attention to the fee that lender snuck on there. We don't charge that a draw setup fee, but I heard some lenders, this is like ancillary income for them. They're figuring out ways to generate more income. We don't do that. But there's some lenders out there that do that. So it's really crucial, to respect the lender, understand they have to make a minimum certain amount of money on every loan. And can you negotiate with them? I would say there's more negotiation power if you're gonna bring them more volume of loans. Generally, the more volume you do with a lender, the better economics to the borrower they should be able to give you, right? I mean, we do. We will help out clients. And so if anybody has questions for me, I hope I was able to touch on this and give people perspective. So, we try to be very transparent with on our term sheets, or any lender should be. But remember, a term sheet is an estimate, right? No one really knows what the actual insurance premium is going to be for title, property insurance, and whatever other settlement costs. So, like I said, there may be a core logic fee, there may be a wire transfer fee. Those are pass throughs. Lenders have only, let's say, an application fee, a loan origination fee, an underwriting fee, possibly, or a processing fee. Everything else should be third party, and going back, they could sneak on extra fees, maybe an admin fee, maybe a draw setup fee, like I mentioned before, where lenders could sneak that on. They'll say, okay, your renovation budget's $100,000, and maybe your total loan is 400,000. They're going to sneak on that 1 point. Now it's an extra $4,000 to the lender. You're paying attention to the points, but you're not paying attention to the fees. So I hope this really helps people out. I hope I address a lot of questions of common fees, how to navigate it. Like I said before, the lender has their set fees, which is really should be a few fees, and then everything else is a pass through, meaning a wire transfer. The bank's going to charge a fee to the lender for wiring money. The borrower pays that to run credit and backgrounds, not free. That's a pass through to the borrower. The borrower pays that. The lender may pay that up front to run credit background, but then it's credited back on the HUD back to the lender. Notary fees. Notaries generally are not free. I just got something notarized from the bank for a mortgage discharge recently. My bank didn't charge me, but that's pretty common on closings because the lender they're probably paying for a notary, mobile notaries or whatnot. An appraisal review fee, that I guess is I'm thinking appraisal review fee. We don't charge that. There may be some lenders that do, where you may pay for an appraisal, and then maybe that lender is gonna charge you an extra fee to review that appraisal. I don't know, but I would, yeah, that could be another junk fee. I just thought of it off the top of my head. So anyways, I really appreciate everybody. Remember, if you ever need a proof of funds, it's free. We do not charge it. I've heard lenders that do charge for this. We don't. It's free, and all you have to do is submit for proof of funds. You'll get it in less than a minute. Also, if you want to submit a loan scenario to us, takes less than 5 minutes, right? If you want to book a call, talk to one of us, you could do it right here. So everything is on this page right here. Also, you have it in resources, and we're constantly enhancing it. This page. Also, if you want to run numbers on your fix and flip, we have a calculator here. We're going to be building out more calculators. So I really hope that I answered a lot of questions. And I wanted to show you guys this too. We added this. It kind of gives you more details of our programs, of how to, it gives you an idea of what we do for the fix and flips. And we have a standard, and then starts at 0.75 rates, and then points and whatnot. So so I hope I was able to help everybody out, answer questions, and please remember to smash that like button, share this video, and I'll see you guys next week. Happy Friday, everyone. Hope you have a great weekend. Bye now.